Gold is one of my favorite things to trade and has been really choppy here recently, but it looks like we might be, I don't want to jinx it because, man, it's been choppy here for gold. We might be seeing a movement higher here that perhaps has some legs to it. Maybe we finally get a little bit of a follow-through move here in the price of gold. Although I'll tell you this, fundamentally, I have a hard time seeing price break through these previous all-time highs without some sort of strong catalyst. When I say catalyst, that is a proxy word for a reason for why gold should break out, right? You've got gold making a move here today, but I would just be cautious not to read too far into this push, right? Because if you are, whether you're a technical analyst or a fundamental analyst, if you are watching gold, if you trade gold, you have to look at these things from the daily chart for a very particular reason. If you only looked at the 1 hour chart today, you would say, oh yeah, gold is really moving and it's gonna, you know, but remember the context that you're in. Gold is in a very range bound and frustrating, choppy market environment. We have to be careful here that we don't assume, you know, just because you're getting a move intraday higher, that gold is going to have some sort of massive follow through. I think as, you know, fundamental analysts, as technical analysts, we have to say, okay, with a grain of salt, you know, we have to look at this move with a grain of salt, essentially. You've had several instances where price looked really strong coming into this 34.50 level, just to find sellers push it right back down. Now, again, I'm not bearish on gold. I have a long position as we speak. This is a good trade for me, but I have my doubts about how far gold will go unless you get some sort of decisive, strong catalyst. What kind of catalysts, and maybe you guys in the chat can help me out with this, what kind of catalysts would get gold to really break the all-time high and stay above it? What would give us, you know, the next leg higher? If we're going to break out of this consolidation, what would you be looking for, fundamentally or technically, for a sign that this range is actually beaten and that we have legs to run here on, right? That's the question. COT data also pointing that gold is bullish in the edge finder. Yeah, what was, let's go take a look here. Institutional positioning, COT data. I forgot what gold did. Yeah. Oh yeah, look at this. So institutions last week bought gold heavily and decreased shorts at the same time. So that is a bullish move in gold price action, or in gold accumulation from institutions. So yes, fair to say that in terms of the latest reported data from the COT, institutions got more bullish on gold. Pretty interesting. So we'll see. To me, if I'm looking at gold, like I said, there's nothing to do here if I'm not in the trade. There's two situations in which if I have a trade on in gold. I'm long gold. I'm looking at trail stops today. In fact, this might actually give me the chance to finally trail a stop loss on gold into profit. I'm looking at closing it or putting a stop just below here. So if I didn't have any trades on gold, the only things I would do, that I personally would be looking for this, right? Break and retest, or a pullback yet again into the lower end of this consolidation. But if I didn't have a trade on right now, there's nothing for me to do in this area. Now, you might have a different style than me, and that's totally cool. There's many ways to trade the markets profitably and far more ways to trade the markets losing money. But in terms of what I'd be looking for, like I said, break and retest or a pullback into the lower end of consolidation. Both of these trades look pretty good to me. I am, like I said, my plan with gold today, if you guys are also in gold longs, my plan personally is I'm looking to take this stop loss that I've got, and I'm looking to move this guy into profit right around here. So if we get a closure that looks like it does right now, then this will be an opportunity for me to take my stop loss and trail it into profit. Lock something in on the trade in case we do get, you know, some sort of sharp reversal. And look, I wouldn't put it past gold. Gold has been really choppy. I think, you know, so I have a bullish position on gold right now, but I think it's also fair to acknowledge that the path of least resistance based on the daily chart would be, okay, we come back up here. There's a good chance sellers take a stab at it. Now, could it break out? Sure. But my opinion, how am I playing this? Again, I find it frustrating when traders on the internet will only ever kind of talk both sides. They'll say, oh, it could go up, it could go down. I find that frustrating. My opinion is I lean slightly bullish. I don't have like this huge conviction, oh, I think gold's just going to go to the moon, but I also want to stay bullish and protect my risk. So my plan would be to take this stop, move it in. I don't know where gold's going to go next with certainty, right? I think that it could come up here and it could break out. But again, historically, it's been coming up to this level and finding resistance. So how am I going to play this? Well, I want to stay to see if I can catch that break. But if I don't, and the market reverses, then I will take a profit.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Let's take a look at the dollar index. Dollar index on the 4-hour chart, finding a little bit of rejection, it seems like, around this area here, this 98.80 to 99 range. Let's tighten up our zone just a little bit here. So we had little bit of sell pressure come in on the dollar here, wicked up into this 99 proximity area, right? And then seeing a little bit of sell pressure, probably, well, playing a role in why gold is moving higher. What's my thoughts on the dollar yen? Well, I'll give you just my dollar view overall because it's going to reflect in the Japanese yen as well. So if I take a look at our economic surprise meter really quick. So if I'm looking at the dollar, my view is still very neutral on the dollar. Like, I don't have a really strong bias one way or the other with USD pairs. If you're newer to the channel, what I'm looking at here is called the economic surprise meter. What it does, it's one of my favorite tools, especially for, well, obviously for currency trading, but it's probably my go-to tool for currency trading 101. What this shows you is it shows you essentially a scoreboard of currencies and their economic data respectively, whether it's outperforming expectations or underperforming expectations. It's kind of like, think of these as like sports teams for a second. It's kind of like if everybody, is disappointed or impressed by the teams that are outperforming what people thought they would do this season versus underperforming, right? Because this is not necessarily saying that the Swiss economy is the best economy. It's saying rather that the Swiss franc has been outperforming expectations here recently, and outperforming, what people thought the economic data for Switzerland would be. Same thing with New Zealand, right? And we can look under the hood in a second. An example here too would be the Canadian dollar has been underperforming what market expectations have been. What are we talking about? Market expectations. Well, there's a whole analyst community. There's a whole, in the finance world, right? There's tons of very smart people who try and make predictive calls on, jobs reports data for these various economies. Tons of people involved in trying to predict what certain economies, what their numbers are going to look like. What this table shows you is if you have the economic surprise meter, you get to look at, okay, according to all of their expectations, which economies are showing strength versus those expectations or missing them completely. Like Canada has been missing expectations here. Europe has been actually exceeding expectations. So which currency is likely to be stronger? Euro, right? CAD is expected to be weaker based on this. This is my go-to. Like, I could use this. If I wanted to only trade currencies with one chart in the edge finder, this would be it. I would just use this and all I need, right? Because it simplifies everything. It just says, because the markets trade on expectations versus what happens. They don't trade necessarily on, that is the biggest thing. The market is expecting something and then something happens. and it either exceeds that, misses it, or meets it. And what happens in that data, right? So if I go take a look at New Zealand, this is a more obvious example right now. New Zealand was expected to grow at 0.7% GDP growth. It came in at 0.8. That's good for the currency. Stronger growth, good for the currency. Another easy example would be, let's look at unemployment rate. Unemployment rate was expected to come in at 5.3%. What actually showed up was 5.1%. Lower unemployment, is that good or bad for the currency? If more people are employed and the consumer is getting paid and doing well, is that good for the economy? Yes. So that's bullish for the currency. Does this make sense? So that is the way to do it, right? Is to look at the forecasted data points versus the actual. So the economic surprise meter wraps it up into a gift basket and makes it really easy to look at. Which currencies are experiencing stronger than expected stats versus weaker than expected? Because here's the thing about fundamentals. Most people struggle with fundamentals because there's so much to look at, so much to go through. You need software in today's day and age to essentially speedline the process, right? Streamline the process.
You know, I haven't really done anything. I'm still in my euro pound trade that just isn't moving. It's been range bound here, pop to the upside, range bound, pop, range bound. So nothing really to do on there. New Zealand yen, still in this trade. However, we did have cooler inflation this morning, or depending on where you are, last night, this morning. So yeah, we took a bit of a hit on the open P&L on this position, but overall still in profit from the initial position and the scaling. So I'm going to leave that open for now. I'm still quite confident in the yen weakness in the sort of short to medium term. Sean, don't be rude, Sean. I'll ask them to ban you again. I'm only joking. Guang, how you doing, my friend? Lee, good to see you as well. Easier said than done, though, having my rules written down in front of me, forcing me to stop if I need to. Yeah, I mean, you know what, Sean, Lee, I had a nightmare this morning. Well, not a nightmare, it's probably not the right word. I had one of those trades where you sit and you can't quite believe what just happened. So, as some of you might know, I'm currently trading or currently testing, sort of sampling a short-term mechanical strategy, because my day-to-day stuff is all very macro-based, all very slow, swing trading, boring stuff. So I've been looking sort of in free time, been looking at something like this, which essentially is derived from Tom Hugo's strategy. So anyway, I saw this daily pivot and I was like, you know what, this looks like a good place to buy. So I went down on the 5 minute, I saw a rejection. I was like, you know what, let's jump in. Anyway, my buy positions were here. So bought into NASDAQ and then missed all of this because I had to close out because I was getting ready to come on stream. So I'm not in the best of moods, to be quite honest with you, but it is what it is. You know, it wasn't, I think I missed out on probably like $30 on that whole move. So it wasn't a big deal. It was more just the principle. Anyway, let's move on to the markets. So I'm a bit mixed on oil. I was quite bullish actually over the weekend. However, coming back to the markets with a fresh head this morning, I'm not sure I still am. So the contradiction really comes from price action. So, I mean, we're on a very, very clear downtrend here on oil. I don't think anyone could really argue that. We did see some buyers step in. We saw a very, very quick sell-off, and now we have failed multiple times to break above our 200 moving average, which is this big white line here. So that tells me the buyers are just not strong enough. We're not seeing the momentum and we're not seeing the follow through to really give me a solid entry. But on the other hand, we do have oil right here with a bullish reading of 6. And this is a little tip for anyone that does have the edge finder or is thinking about it. It's a great way to filter trades. So without the edge finder, I might have actually been looking to sell, and maybe that could work. I'm not saying obviously that's a terrible trade idea because I don't really know much about oil, I'll be completely honest. But already that's filtered out a trade that I might not want to be in if the technicals are looking very bearish, but the current macro landscape is leaning more bullish. It puts me in a position where I can't really do anything just yet. Maybe if we come down towards 60.6 or 55.6, maybe then. But yeah, right now I can't do anything on oil. Gold's having a pretty nice push. However, we are still within this sideways mess. So, you know, I've been saying it for a while over the past couple of weeks that I'm not really leaning either way on gold, because I just can't justify being a buyer or a seller right now. And I think that is backed up by price action. So I mentioned it in my Sunday watch list video yesterday, that it seems like this market really is just waiting for the next kick. It needs something to drive it either way, because at the moment, again, you can make arguments to be a buyer or a seller in my view. This is a market that is very discretional in terms of the drivers, because, you know, you could be sat on the rate cut side or you could be sat on the rate hold side. You could say everything's priced in. You could say that things are still a bit escalated. There are still tensions there. You can say central banks are still buying. You know, there's arguments either way at the moment for gold. And I think that is reflected very, very accurately in the price action. So for me, yeah, I can't really get on board being a buyer or a seller. What would change that, however, is if we obviously either got a development in the macro or the geopolitical landscape, whether that be an escalation in war, whether rate cuts become a lot more prominent or a lot more assured, maybe is the word. Or even if we just get a very, very simple break and retest of these highs. Again, that would be a very simple way to get in. So that's the current view on gold. I am sort of ignoring the chat. I do apologize. Chandler wouldn't do that. No, Chandler's lovely. Do I need a psychology session with Bashi? You know what? Trading low time frames has reminded me why I hate low time frames. It's interesting because it's like a world that I've just never paid any attention to. So, you know, I find myself looking at individual candles and like micro analyzing candles, which I've always said is kind of useless. However, I've fallen into it and it is a little bit addictive. You know, when you see on social media, you've got those primarily ICT traders that have drawings of patterns and notes and stuff. I always thought that was really, really stupid. And I've got to say, I kind of get it now. I understand. So, you know, I'm willing to hold my hands up and say I may have been wrong. But I think that's what makes a good trader, isn't it? It's being able to understand different aspects and admit when you may have been on the wrong idea. Anyway, Edward, hello, good to see you. James, out of any G7 countries, who will hike rate first apart from Japan? That's a really interesting question. Actually, let me just quickly start. Let me hold on. I don't want to leak my my selfies for thumbnails. Just while you brought that up, I'm going to show you this really quickly. So this is from the 18th of July. It's from Credit Agricole, and it's basically what you just said, apart from Japan. Japan, I'm not going to read all this, but essentially what it says is Japan cannot hike rates, which is also what I've been saying, that the data for Japan is just, they can't hike rates, essentially. So Japan's stuck, which again, it flattens my yen bullish idea that I had at the start of this year. Okay, so which one could hike? Well, we've got a couple of ways to do this. So let's have a look on the Edge Finder. Because as far as I'm really concerned, all of them are pretty much just wait and see. So where are we at? We need interest rate projections. And then let's have a look. So let's add the Aussie, let's add the CAD, SMB, and let's add the RBA as well. Hold on, let's give it a minute. So none of them look like they're going to hike. I mean, that's a given. We're in a rate cutting, what do we call it? A rate cutting cycle, essentially globally. However, which one would cut the least really is the big question. So obviously yen. So the SMB might hold rates steady until Q2 next year. Something to keep in mind. The Fed, I'm still very mixed on the Fed. I would say the Fed is a big question mark. July, in my book, is completely written off. That's not going to happen. That's just going to be a hold. Although Waller seems to disagree, but what does Waller know? But yeah, I mean, to be honest, hike first. I would say maybe the Bank of England, but that is a complete shot in the dark. I really don't know, unfortunately. We'll have to just wait and see what the data tells us, really. Hello, James. Any thoughts on gold? You've just missed it, Yusuf. We did just discuss gold. Just to quickly recap it for you, though, buddy. Essentially, I can't do anything because we're stuck in a sideways range. So being a buyer or a seller in this market is tricky because essentially the market's playing ping pong. We go up, we come down, we go up, we come down. There's no defined range at the moment. Obviously, we do have a long-term range or higher time frame trend, but right now for speculative short-term swing trading, like the majority of us do, is very difficult really to get an entry here, or a trend-based entry, shall we say. And finally, there is an argument to be a buyer and a seller at the moment in gold as far as I'm concerned. So yeah, I can't really do much.
I said that I would exit my dollar-yen trade, the last part of it. And I got out at about 148 and a half and some change. I don't exactly know, but somewhere in this direction. So I'm going to put it down a bit. So somewhere in the region of about 500 pips on that, and on the other ones, and about 300 on the first batch. So that's kind of my summer trading, and I'm not asking you to rate it, but at the same time, I also said something in the essence of I don't know what's going to happen today or tomorrow. But my seasonality, and for whatever reason that might be, I'm seeing that potentially, for whatever the reason is, that we might get a shift. And what happened overnight, and I can't really explain it to you other than it happened. We haven't made a higher high. We have come down to 171 on the euro yen, which is one of my favorite pairs. And we are threatening, if that makes sense, 172 to break. And that would be great. And I said that's probably going to make a downtrend to about 20th of August. That, for that matter, can be absolutely bogus. It might never happen. Or it might actually happen, and you might actually be very aware that if it does happen, it's for, probably time to reconsider your positions. Not financial advice whatsoever, but at least brought to your attention. Now, this was last year. I don't think we're going to do another, 2,000 pips. That's not necessarily what I'm saying we're going to do, but if we can get like some kind of peak to an extent, if we drop really fast that we did 1 year, and if the drop is about 500 pips or more in the next 7 days, that is more than anything else, more than good enough for me. So, hi, my name is Evan. I'm the Yen Man, and I do crazy things with yen, and it's probably boring, but I love it, and that's why you should love it too. Because why isn't it fun to trade something you don't really understand, but still understand it to the extent that nobody else understands it, but you become the expert because nobody else understands it. So I've done this for a long time, and I speak about seasonality, and I can't explain to you why money flow, why something would rise, why something would fall, why something would do what it does, other than it gets money in the bank. My expertise and my interest is what makes money flow, what drives the market. And I've said that to you many times. And I'm going to say it many times again. And I said yesterday, what if Euro New Zealand comes down? Sorry, why if Euro New Zealand comes higher, makes a reversal, comes back, then continues at about 21st of July, about every year, that's a good buying opportunity for me. I can't tell you. I can't reason with you. I can't explain it to you. Other than, okay, that's about to happen. I said yesterday, I'm looking for the bullishness. I don't like it. And why do I not like it? Because I am kind of, my brain, and my mouth kind of always wants this setup here. This is low. Lucas says pound seems strong today. But yeah. And Bashi says, is price action not so great? Welcome to summer months. Like, Bashi, come on. You know me. This is about expectations. Now, and that's kind of, I really love that you say that, because that means that your price action eyes is working. And what's most important in that situation is actually take a glass of water and do nothing. All right. Yeah, it's your first training summer. Yeah. Good. Right. Take notes every day. Not necessarily every day, but for the summer, just summary. Probably by Friday. On Friday and this weekend, you have a summer summary. Of then you go through, what happened, and there's a lot of noise that has happened, but hasn't really made market trend. Haven't really made the market continue in the direction. That would be my first point. My second point is price action or volatility has been very slow and very low. What we thought was going to be, whoa, Powell was going to be out of office, where Trump came back and said, well, no, he's not going to go anywhere. Okay, we then collapsed the entire candle. For everyone who bought into that, and I would argue that those were at least in some loss, or maybe have lost something into it, that's not what we do. Okay? That's not what we do. And I say, and it might be cheesy, and I say big players or the hedge funds goes on vacation. Europe goes on vacation, and it's bots, it's machines that is operating within certain parameters, and I almost think that there is like a collective agreement. Not quote me on this, but I feel like it's a collective agreement among those machines learning people, input people, that we're not going to draw a market more than 3%. Just for the fun of it. Like, okay, we're just gonna have fun, No, sorry, we're not gonna have fun. But what has been fun, and I don't know if expected it per se, is Bitcoin. Has had a very nice summer month, very nice July, and I can't take any credit for that. Because I previously said I think we're going to go down to 92 or whatever and then go higher. So a bit lower and then higher. As you can see here from my absolutely fantastic drawing. We did. We just didn't go as deep as I thought. Okay, so what do you do now? Okay, hold on for dear life or whatever it is. Do you mention it's good to pause trading in July? Can you explain why? Min, you are such a gentleman. You know that, right? I love you for that. This, in particularly, and more importantly, this. Does this look like a trend? Does this look like a trend? And overall, it does probably look like a trend. But what generally has happened to me, and this is painful to talk about, is during July, when I came out of out of school, it never hit my take profit. Always back to break even. Always back to hovering just above the stop loss. I'm just paying swaps, man. And I started to think, because everything I do I have to analyze, right? So I'm like wondering, what am I doing? Why am I doing so? What makes me do so? Because I think that the market's open 24 hours, 365 days a year. And I thought, great. That should be great trading, right? No. There is times of year that there is open markets, but there's less volatility. We don't have a trend. We don't make a new higher high. We don't make a new lower low compared to the 15th of June or whatever, 16th of June price. And probably 18th because of that's the FOMC meeting. From the last FOMC meeting, and we did make a high. But we have also come down, so we haven't really done much. We haven't really done a lot of damage. And I said before July, we might have a nice trend retrospectively. But then during, very difficult and very frustrating. And that's why. It's so slow, it's worse, and you can literally go out and paint the house and come back, and the market still hasn't moved in your direction.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.